I know it's been a while, but we're just going to get right back into it, all right? Like we never left. It is Monday. Welcome back to the grind. And I want to start this video off by being a little transparent today before we get into it. I saw something over the weekend that really let me know that sometimes we need a reminder that you're never supposed to compare your journey, right, to somebody else's. And I know it sounds cliche, but listen, it's really important that you run your own race in the stock market, if nothing else. Whatever it is that you're doing, whether it's dividend investing, value investing, growth investing, or even if you just like gambling and losing all of your money with options, right? The point is, you have to get to a place where you're comfortable moving at your own pace and at your own speed. And you're doing that comfortably because you know your stuff, according to what your personal individual situation allows. It doesn't matter where you are on your journey. It matters where you're going and how you finish. It sounds cliche. I know it sounds cliche as hell. But if you're ever going to use that saying for motivation, please do so with the stock market, if nothing else. Now, welcome back where we talk about how even everyday average earners like myself can completely change their finances through simple strategies like dividend investing. And hey, let me tell you all something, okay? I own MAINstreet Capital stock in 2 separate investing portfolio accounts. 2. And this stock has done nothing but perform well in both brokerages. It's actually overperformed. Now, as the saying goes, past performance is never an indication of or guarantee of future gains. I get it, all right? I know. But even with some of the negative consumer sentiment out there surrounding Maine, I can only give you my perspective on it, which happens to be very positive. So let's talk about it. First thing we need to do is to understand who and what the business of MAINstreet Capital is and what it is that they do. Now, if you Google Maine, okay, they're going to give you the technical definition of what it is, which can sound confusing to the average person, right? But broken down and simply put, MAINstreet Capital is a BDC. It's a business development company that mainly provides methods to their partners that increase and grow their business as well as lending out loans. But the bulk of their business, okay, and how they make their money is on the back end of purchasing debt and investing into businesses in the form of buyouts. Now, one thing you might say to yourself in this moment is, who wants to invest into a company that buys the debt of other clients when the state of the economy is signaling nothing but red flags, inflation, and taxes are through the roof, right? And the debt in the American economy being at an all-time high? Who in the world wants to be involved in that? Because if businesses can't afford to pay back their debts and loans, then what kind of omen does that spell out for a company like MAINstreet Capital? But fear not. If it's one thing we all know, it is that the economy will always recover. Why? Why will the economy always recover? Why? Let me ask you a question. Why will the feds always seek for a way to lower inflation, lower taxes, and lower the taxes on loans? Why is that? Let me tell you why. Because the economy can't survive if the feds do not do that. The economy will not last. Our economy, our ecosystem, the way we operate on a day-to-day basis, businesses, companies, they will go belly up if we weren't able to get in control and out in front of this moving freight train. And I know it sounds crazy considering the national debt in this country being at an all-time high. I get it. I get it. But if there's any company that I am willing to put my trust in, because of their past performance and the way that they've been able to move and the way that they've been able to shift money and move around money so that they are protected against an inflation economy. If it's any company that I'm going to trust, it's Main. And right now, I want to get into why. Let's take a look at the charts. Y'all already know where I'm going. I'm going to my favorite place. Okay, stockanalysis.com. It's free. It's free, people. Stockanalysis.com. It's a wealth of knowledge over there. Please go ahead, add it to your repertoire and add it to your tools, right? To your tool belt of places that you can go and actively just look up and just soak up all the information there. Again, it's free. You don't have to pay for it, right? But I got to pull it up here. MAINstreet Capital Corporation, ticker symbol MAIN. And right now, at the time of this recording, it's sitting at a price point of $48.57. Now, for some of you, that may seem like it is a bit steep, right? But listen, the time of having to purchase a full stock, it's over. It's over and done with. Robinhood came in and they killed all that noise. You ain't got to own the whole thing now. You can have pieces of the pie. It's like going to Sam's Club. You ever been to Sam's Club and you go through there, or you walking through Costco and they got the little samples, right? They got the little samples that you can stop at the table. You pick up a sample. You like it? Cool. You might want to buy the whole thing. You don't like it? It's all right. It's not worth me spending my money on. You throw it away and you keep it moving on to the next sample. That's what the stock market is. That's what partial shares is in the stock market. We have that now, right? No, gone are the days where you got to call in on the telly and speak to a broker over the phone to buy a stock. It's done. We in the digital age. Step into it. So, this price point of $48.58 doesn't scare me in the least. Because I can go and put $5 on it tomorrow if I want to, and I'll still own a piece of this great pie. But let me show you how great the pie is. Let's drop down to the overview. On the day, it's looking 45%, right? I'm sorry, not 45%. That would be catastrophic. 0.45%. But listen, let's go to the max chart. Max up 226% all time since its conception back in 2007. This thing has been moving, shaking and moving. It's been going strong. You can see the dip there that happened. Y'all know when that happened. Y'all know when 2020, what happened in 2020. We talking pandemic times. Nearly every chart you go to is going to have that dip in it around that time, right? Because we all remember what a struggle that was for our economy and what was going on. So 2020, you see the dip there where it dropped back down. And this dropped considerably. Jesus Christ. I wish I had known. I wish I had known then how great this would be. Because I would have loaded the boat. You see that? Sheesh. It was back down at $17.82 in 2020. And now 4 years later, it has risen back to some of its all-time highs. Very, very near its all-time highs. And listen, the financials are phenomenal. When you go look at their sheet, when we get into their financials, you're going to see listen, hold on. Before I go there, let me click on a 5-year chart. 5-year chart, nothing but green. Max chart, green. 1 year looks immaculate. Green. Year to date, green. Now, the one area that you're going to see a dip is on the month, right? Haven't been doing that great this month. Down 5%, 5.5% nearly. But listen, every other chart is green, and I'm going to show you why, because we're going to get into the financials. But about Main, here's a little bit about it right here on the side. It tells you what industry they're in. They're in the industry of asset management. Their sector is financials, okay? Their IPO date, again, October 5th, 2007. So they have been going strong, right? They have been going strong for 17 years. They have been going strong. 17 years they've been in the business, and they have been doing well. But listen, we already talked about what MAINstreet Capital is. Now it's time to get into the financials before we get out of here. I don't want this video to be too long. But you see that revenue growth there? That's what I love. Oh my God. I'm getting a little hot. I gotta tell you, I'm getting a little hot and bothered right now just looking at that growth revenue. It's so beautiful. The growth revenue is so beautiful. This company has been doing so, listen, I wish that I had known 5 years ago what I know now about Main. Okay, Main is one of my dogs in the fight, all right? You go over to the balance sheet, it's more of the same. You see the dip in cash growth. I'm not worried about it at all. Look at the previous years, right? What you want to go to is, of course, you want to go to the mother of all, the cash flow. You want to know what their cash flow is doing. If they have cash flow to pay out these dividends, right? The free cash flow, last time we checked, which was 2023, December 2023 of last year, they had well over enough, okay? Well over enough to pay out their dividends. So I'm just looking at an immaculate balance sheet. If we go over the forecast, let's see what the analysts are saying. Remember, analysts are people like you and I. They're nobody special, right? They just look at things and give you their opinion on what they believe according to the data that they have. So the 5 analysts with a 12-month price forecast for MAINstreet Capital stock have an average target of $48.20 with a low estimate of 43 and a high estimate of 52. Again, I tell you that this price right now that it's at is near its all-time highs. So the average target predicts a decrease, right? Because they're saying that the average should be lower than what it is right now. So they recommend you just hold this. They recommend you hold it. If you own it already, just hold on to it. Don't make any moves. They're saying you might not want to add more. You might not want to load the boat right now, again, because it's near some of its all-time highs. You got to make that decision for yourself. And if you decide that you're comfortable with adding a little bit more to increase that dividend payout, that is paid monthly, by the way, then by all means, do not let this stop you. Lastly, let's go to the dividends, which is the reason we are all here. Annual dividend is $3.18 per share. Again, MAINstreet Capital has a dividend yield of 6.55% and has paid $3.18 per share in the past year. The dividend is paid every single month. And listen, that means that compounding, right? That dividend compounding, that snowball effect is taking place quicker. It's taking place sooner. Every single month, they're paying you a dividend. And right now, that dividend is sitting at 25 cents per share. So if you owned 1,000 shares of this thing, right? Let's just say you owned 1,000 shares of this, which will cost you $48,000, right? $48,500, right? Nearly $50,000. So let's just say, hypothetically, you have $50,000 to throw at this thing. That would net you on a monthly basis $250 for doing absolutely nothing but owning this stock. Listen, do not take my word for it. Please go and do your own due diligence. But I personally love Main. I will continue to hold Main for the foreseeable future unless something happens that's drastic that I need to pivot and make a change. But listen, you all let me know what you think down in the comments. I want to know if you've got Main on your team. Let me know. I want to know if we're buddies. I want to know how close we are. I want to know if we're Main friends, right? But listen, that's going to do it for this video. I hope you all took something away from this at the very least. And remember to invest diligently, but above all else, invest responsibly. I'll see you in the next one. This has been your play of the day. Also, can't wait to see you guys in the next video. Listen, I am back, all right? And we're gonna try to be more consistent with this thing, and we're gonna run out the tab, right? We're getting back to our dividend investing, and we're gonna just see how we can turn the rest of this year into a phenomenal year. I'm gonna try to stay on top of all of the headlines for y'all, all right? But listen, I'll see you in the next one. Later.